The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks, going back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com and coming to you live on the TFNN website at TFNN.com, also on Tiger TV there, and on TFNN.mobi on your mobile phone. And you can also find us live streaming inside the eSignal platform now, so that's a pretty cool perk that they've added on in. But go ahead and get some stuff up for you. We'll check out where everything's at and see what we can do with the day. Okay, so let's start off with just looking at some of the news that's coming up and make sure we get our news trading plan down and ready to go. And so I will pull that up and we'll walk through it step by step for you. Okay, let's see here. And don't know what to do about a helicopter except for just keep going with the show because I can't stop the show. All right, so coming in at let's see, 12 o'clock right now. What do we have on the news? Throws me off every time that comes up. We got a couple things here. There's not a whole lot built in, but we do have a couple things. Okay, so tomorrow, or let's see, coming out tonight. Yeah, okay, so tonight, like tomorrow, tonight, we got the Frank Trade Balance Report. We're looking for about $35 move on the dollar Frank, 35 pip move on that, and that's entering at 11 for a 7 a.m. expiration. Again, entering at 11 p.m. for a 7 a.m. expiration, and we're looking for a $35 minimum profit when we're doing a iron condor on that. So what that's going to look like is you're going to pull up, you're going to basically look at the 7 a.m. only expirations during this time. Okay, and then from there, you're going to look and see what it's going to say is maximum profit. Okay, but what we're going to do is we're going to combine the two maximum profits together to find the minimum profit of at least $35. That's the trade that we want if we're going to do it. Now, it's not always there. Some people think, oh, well, it's not there. Well, it's okay. It's not always going to be there. This is if we're going to put our money at risk, we want there to at least be this much profit potential in the trade. Again, that's a maximum. It'd have to, land right in the center for us to actually get that profit, to be able to receive that amount of profit. Okay? But that doesn't mean that we would make that much profit. Okay, so it'd have to expire right in the center of the two strikes. So every strike above or below that, or every tick above or below that middle strike will actually be $1 difference in our profit that we'll receive. So if we go in and, let's see here, let me pull up dollar Frank, just as an example. Okay. And if I go over here and let me open up spreads on dollar Frank. Let me pull that back up. All right. And then now let's go in and there may be a disconnection for a moment because apparently there's a lot of popping. So please hold for 1 second. Not sure if that's any better, but that's the only thing I can do while I'm talking. All right. Okay, so I'm sorry. Please hold for 1 second. We're having a technology issue. Because I can't do anything about that. And if y'all can
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, I think the operator may have got it worked out, or we may have got it worked out, or they're trying to help us work it out. I don't know, but we'll try it again on round 2 here, and we'll see how it goes, okay? So let me reopen this so we can start again on the dollar franc. What we're doing is we're talking about the dollar franc news trade, so we have just a fresh segment here, and we're talking about entering at 11 for a 7 a.m. expiration for a $35 minimum profit. Okay, and we're going to do this on the Nadex exchange over at Nadex.com, and it's called Iron Condors, where we buy the lower spread and we sell the upper spread. So if you're going to do this, you'd go and you'd find the dollar franc, and then you would look for the 7 a.m. expiration. Now, there aren't any 7 a.m. expirations right now, okay, because they don't start until 11 o'clock. So what I'm going to do is just to help you learn the concept of the idea, if we can find any. I'm trying to see if there's any with positive premium. We've had so much movement today. Let me see here if I can find something that will work well. If I can, then I'll use that as an example for you. And we'll put those trades together, have all the pieces, and you'll learn how to do this. So we're right in the middle of the day, right after a lot of the premium has been flipped to one side or the other in a lot of the different trades. Let's see here if I can find one good contract, or just go with the example. The simplest example I can give you, I'll be able to do natural gas. Let's see if we can make any of these match up. If we can, then that would be perfect. But I'm not quite sure we're going to find anything that's going to match up just right at this point in the day. Okay, so we're just going to have to go with this. So let's just say this was a 7 a.m. expiration, okay? So at 11 o'clock at the 7 a.m., and when you look at it, there will be positive premium on here, okay? So right now we have negative premium, like -2, -4, but you'll have to, like, see how that one says +3 and that one says +3? There we go. There's a odd example, but it would work, okay? So right there, we have two examples. Now that's only $6. I would want this to actually say, if I combine $3 of positive premium plus $3 of positive premium, that's going to be 6. If I combine those two numbers, those two positive numbers of premium, I'd want them to equal my minimum profit goal for the trade. And what did we say that was? We said on this one, it's $35. So right now it's only 6, but I'd want it to equal 35. So what most people do is they do the opposite. They go in and they do straddles. And then they get mad because they feel like they're not making any money because they're losing money because they're paying the premium. And the premium payers are usually the ones that don't make as much as the premium collectors do on a consistent basis. Now, every once in a while, do the premium payers like get a big payday? Yes. Okay? So that's the market will move huge and they'll just cash in. Okay? But on a day-to-day basis, the premium collectors are the ones that are actually more consistently profiting. Now, these two numbers need to equal that minimum profit. So it's the maximum profit, on the trade and all that stuff, but we want to see a premium. We want to see our maximum profit be $35 on the trade, okay? So again, $35 on the trade is really what we're looking for. And one thing I've learned to do is I actually don't have to limit it. Ideally, I can get all of that money in premium. Okay? So ideally, like that $3 plus that's $3, that could be my premium. But there's actually one way you can stretch the rule, which works actually very well, and that's you can look at the maximum profit. See how the reward is actually +10? Why is it +10? Well, because it's actually the market's a little bit above, it's inside, it's in the spread. Okay? So there's actually 7 ticks of value right there, plus the 3 ticks. So 7 ticks of intrinsic value. Plus we got, going into it, we have a few ticks of premium. So I can actually look at that +10 and that +3, and now I have 13 pips. All right. So if I have all premium, that's just icing on the cake. But I have to have a minimum profit, minimum reward. Okay. Adding both sides together with the floor of the sold strike and the ceiling of the bought strike. So 9,700 ceiling of the bought strike, 9,700 ceiling of the floor of the sold strike. Those are matching. And I want the minimum reward, the minimum profits combined, ideally not too off balance, to be $35 for this specific trade, entering at 11 for a 7 a.m. expiration. What that'll do is it'll allow the market to move up 35 pips or down 35 pips. I'm still break even. I have a 70 pip break even range. Now, it also gives me, since I could make it potentially up to 35 pips, the market have to move up 70 pips or down 70 pips for me to lose 35 pips on the trade. So how's that possible? Well, if it moves up 35 and I'm break even, moves down 35 and I'm break even. Well, then if it moves 35 more, I'd be down 35 pips, right? So if I can get that combination of that minimum reward on both sides combined to equal 35 pips, and it does happen often. Sometimes it has to oscillate a little bit. You have to watch it. But that's on this specific Iron Condor. Now, I do a lot of Iron Condors beyond news. That's just a way to get started, okay? Then that's my dollar franc trade. So at 11 p.m., I'll open this up. I'll look for the expiration to say 7 a.m., okay? And then I'll look at the two minimum rewards, make sure they equal 35 pips. And the closer to 11 p.m., the more time I have until expiration, so the more premium will be in there. And then I put that trade on. And then, of course, I can put a stop on 35 pips above and below the floor, okay, if I want break even. Now, I don't like doing that because I expect it to move 35 pips. So where would I want to put my stop? I like to put my stop at my maximum reward to a 1-to-1 risk-reward ratio. So I would put it 70 pips above and 70 pips below that center strike. So 97.70 and 96.30 is where I put my stop trigger. Of course, you got to use the scanner for that, but that's where I would put that to let it help with the trade overnight. So there's a lot of information in that. I went sort of fast on it, and I'll keep going. I'll go over those again over the next week or two. I'll keep covering them, but and we'll find some more examples. I was hoping to put one on exactly for you. And let's see now, what are the other news trades that we have that we could go into for you? And let's see, we also have a pound dollar one. It's also 35 pips. It's also 11 to 7. So there's two different Iron Condors on two different currencies, allowing you to spread out your risk a little bit for the same amount. This announcement's going to come out at 4:30. The other announcement's going to come out at 2 a.m. So again, find pound dollar at 11 o'clock. Find the maximum profits on the 7 a.m. expirations with the same floor and ceiling. See if they equal 35 pips or more. If they do, you can put those trades on. Then you can put what? You can put a stop 70 pips above the floor and 70 pips below the ceiling on the opposing side trade. We got other ones. We got ones on Thursday morning, 8 a.m. to 10 a.m. This is on the CAD Wholesale News, being released at 8:30, entering at 8 a.m. for a 10 a.m. expiration. Again, looking for $30 minimum on this one. Now, again, we may have like 3, 4, 5, 10 of these in a week. We may get all of them, we may get half of them, okay? So we just want to find the ones that give us what we're looking for when we do the trade. We got the U.S. Philly Fed Manufacturing Index, existing home sales. We expect it to move at, right around 25 pips, okay? And, sometimes it'll move 28 pips. That's why I don't like, butterflies on these at 25 pips above and below or something, because, well, if it moves 28 pips, binaries was everything. But if I go into the Iron Condors, I'm down like $3 if it moves 28 pips and it expires 28 pips. So not a big deal compared to 25 pip potential profit. Again, U.S. Philly Fed Manufacturing Index, existing home sales, both coming out tomorrow, right around 10 a.m. And so we're going to enter at 9 o'clock for an 11 a.m. expiration for a minimum profit of $25 on the trade. Okay? That's the trade we're looking at for tomorrow morning. We'll also have weekly natural gas, which often can give us the opportunity to go in and do either straddles or strangles or butterflies. You just got to look at basically what is the premium being given to you. Okay? I usually like to hop in these things like 10 minutes before the news report comes out. All right? So like 10 minutes before the news report comes out, that's when I want to do, straddle or strangle, because I'll have as little time as possible on that one. And this is just on the natural gas inventory. Also, we have the same thing on the weekly inventory report on oil. So both weekly and natural gas and oil inventory can set up for a good trade. CAD variance reports being released at 8:30. So enter at 8 a.m. for a 10 a.m. expiration, $30. Okay? So again, entry at 8 a.m. for a 10 a.m. expiration for $30. And we're looking at this on Friday, and that's the CAD that has core CPI, core retail sales, and CPI all coming out. So again, at 8 a.m. by the 10 a.m. expiration on the CAD, USD CAD spreads, and look at the minimum or the maximum profit on both sides, the bought lower spread and the sold upper spread, and make sure that equals at least $30. If it does, you have a trade. If not, you don't do the iron condor, but you do know what the expected move is, and so you can use that in any other type of trading system that you may be using with it. Okay. If we go into next week and getting you set up on Tuesday, we're going to have the 9 a.m. to 11 a.m. U.S. various reports coming out. Again, this is next Tuesday on the 25th. Consumer confidence, new home sales, Richmond Manufacturing Index. Entering at 9 for an 11 a.m. expiration for a 25 pip minimum profit on the trade. Okay. And if we look on over at, let's see, Wednesday, this will get you caught up through the next show. We got U.S. core durable good orders and durable good orders news at 8:30. And again, this is not this Wednesday, but next Wednesday. Looking at the euro dollar on this trade. And for an 8 a.m. entry for 10 a.m. expiration, a minimum profit of $30. And these come out just week after week after week. You get so many opportunities to practice these. As you get these down, then you can start learning how to use deviation levels and expected range movements and combining those pieces together and actually finding iron condors all throughout the day, different hours. There's so many different ways you can trade them, but this will give you a great way to get started on doing this. Okay, so start with the news, and even if you're not a news trader, it's a great way to learn how to do these trades. And even if you're not a news trader, the news is still moving the market, so you need to be aware of when it's happening. Okay. Let's see here. That covers our news reports and gets you all caught up on how to trade the news for the week. Let me go ahead now and pull up something else here.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right. So again, but anyway, that's one of the things I always like to dig into whenever I see an oil inventory or natural gas inventory or whatever release, is I click on latest release. It'll actually give you the release from the source, and you need to learn sort of what to pay attention to inside this. Okay, but inside this, it shows 2.6 minutes. That's sort of the number I know I'm looking for as far as the number that's usually looked at. So I find that 2.6 million number, and it's going to be in the same spot. Like they use a formatted thing to build all these. So now I know, okay, that's where that number is. But then I want to go, okay, what's read through it a couple times and see what seems important. So that right there, this statement is massive. Okay, at 456 million barrels, U.S. crude oil inventory remains near levels not seen for 80 years. So that's a pretty big thing that you may want to look at. And remember, we talked about straddles and strangles on oil. So whenever you're looking at oil and you see those kind of moves, then that definitely gives you the opportunity to go in and put on a trade and possibly catch some pretty big moves. Okay. And you can do that on Nadex, and let me show you how could you do this on Nadex? Well, let's go in and I'll open up oil, and let's see if I can put that up. Okay, so now we're over on October. And so if you were looking at the oil inventory and you're going in and we go, okay, well, what time does it come out? It comes out at 10:30. So let's say you're going to do a 2:30 release. Okay. Then we could go, okay, well, what price was it at 2:30? So let me open up an indicative chart right here. Well, it wants me to log back in real quick. Okay, so I'm going to go here and then open up the indicative chart. There we go. It's right there by the indicative index. Okay. And we go, okay, well, what time did the report come out? It was already moving pretty good before the report came out. Let me see. We had the report come out on this one at, I just want to make sure it's 10:30, but yeah, at 10:30. So we go over here. We'll just mark that. So we got 10, and then let's make this a, all right, so 10, 05, 10, 15, 20, 25, 30. So actually, let's move it forward one bit right there. Okay. So right there at 10:30, that's when that came on out. And then the next step is we can look at the actual contracts. Okay. And on the contracts over here, we can then go, okay, well, let's look at the charts on the 1030 contracts. 'Cause now we know what price it was. It was sitting right up here at 42.60. So we're a little off balance, but let's say we just looked at, this 43 right here as the sell and this 43 as the buy. Okay. And then we can actually look at these two contracts. Get this one open right here. That's our there. And now I need a 43 and up, don't I? Yeah, this 43 is a buy. There we go. Okay, so 43 to 46. All right, so now let's go over here. Let's click on this. Let's open this chart up. Close that one down. And let's go over here. And let's open up this 38 to 43 contract. Okay. Now remember, the market was right about the center of this whenever we first started. Okay. So if you would have went in right around 10:30 and you would have got the contract like right there, and then over here we would have got the contract right here, and then we'll put basically what was the contract priced at. Okay. So the contract was right there. We're just talking about a 5-10 minutes before. Okay, and that sort of shows you where the release happened. Okay, so it's a little bit off. So there was, a little bit in there. 38.43. I need the 43.46. Put these two contracts side by side for you. When you put them all together, there we go. There's our 43.46. Okay. And then open up these drawings. We're going to get in right here. And we'll grab this one. Right there. Let me move this line over one. There we go. Okay, so now what you can actually see, which is sort of cool, is you can see the price action of the contracts based on the oil inventory report. Okay, and by being able to see that price action, you can see sort of what would have happened had you have done this trade. So if I would have bought this contract right over here, say at 43.10, I would have had 10 pips of risk on a 43 floor contract. Okay, so 10 pips of risk on a 43 floor contract. And every pip is worth $1. I could have done 1. I could have done 10. I could have done as many as I wanted to. Okay. But now at least what the risk was. And this is a way you can, look at a trade backwards in Nadex, for at least the current day. And you can go, hey, is there something here? Is there some way that I could, have possibly profited on this? It's sort of a way to, back test, come up with ideas. And it's just by opening the charts of the actual options contract. A lot of people never look at the options contract chart. Okay. So by looking at this, if I would have risked 10 pips on one side, all right, what would I have made on the other side? Okay. Or what would I have been risking on the other side? Well, we know at least 10 pips of risk on one side. The other side had a ceiling of 43, and I'm selling it. So if I sold it right over here at around 42.45, okay, then I would have had how much risk. I would have had 55 pips of risk. So 10 ticks or pips of risk on the long, 45, pips of risk on the short. Okay. Market flies down when the release happens and gives me the opportunity to, go in and takes a profit. So we go down here at around noon, it's bouncing up and down, take profit at 41.20. Okay. So if we take profit down at 41.20, then that would basically be, 41.45, 41.20. We'd be able to go down 41.45, 42.45. I'm sorry, down to 41.20 would be 125 pips. So, or ticks of profit. Okay. So massive profit on and making much more, only on a 45 pip risk on the trade. So that would be an example of doing a straddle. Okay, doing a straddle on oil inventory. And then let's see here. So we got that put together. And so that's a trade you can look at. And then this is sort of the after effect of, hey, if you sold this contract when the market was right there, all right, so when you sold it right there, what would the risk reward graph look like at this point? Well, the risk reward graph would basically show, all this profit over here. Now it's showing loss, but if you started here, you would have been able to, capture that profit. So this is sort of after the fact, but using, again, the charts that Nadex provides to help you learn, so we got this indicative index chart over here. So, and this will open up the charts for you. So indicative index chart there. And then you have the actual contract charts right here in order to open up and look at the contracts. Okay, so just to sort of, let you see an example of a straddle. Now, of course, you could also do this on binaries as a strangle. So, but just want to give you at least one example for today on how to put all these different pieces together and what may, work, best for you. Okay, so with that piece done, let's go ahead. There was some massive moves today on the indices. There's some good moves even on gold. Some of the contracts that I like to look at a lot, people are always saying, hey, Darrell, what do you trade? What do you trade? How do you trade this? So I like to trade NASDAQ and gold are a couple of my favorites. They have, pretty tight bid offer spreads, usually 2 to 4 pips, sometimes 1 pip. Bid offer spreads on the spreads, the Nadex spreads. So let's look at some live pricing right now. Let's see what do we got on the spreads. If we go over here, 28.7, 28.9, 28.8, 29. 1130.1, 1130.2. So you're talking 1 to 2 pip bid offer spreads. Okay, that's awesome. So those are obviously really, really good spreads, bid offer spreads, and same as you're getting on futures. Okay, you can do 10 contracts, you can do 100 contracts. By the way, the fees cap out at $9. So if you go in and you do a 100 contract order, you're gonna pay $9. And even if that order gets filled in different, like 20 get filled, the 30 get filled, the 10 get filled, whatever, it's still $9 if it's one order that you submit. But 1 to 2 pip wide bid offer spreads, so I really like that. They got some decent distance on them. Of course, we're down here, really push it down. But I mean, there are some spreads that are obviously tradable. Even with the big moves, we got big spreads available. You can go in and trade. And like I said, some massive moves. Now we also go in and we can look at contracts like the U.S. Tech 100. I know that's big Tommy O'Brien favorite as well. He loves trading the NASDAQ and the Qs, and we pull these. We trade the NASDAQ a lot on Fridays together on the Bull Bear Binary Hour. And if we go over here, we look at this, then we can see a few different things. One of those is we can go in and let me pull this up. I want to show this to you, but okay, there it is. Just share it over. And let me pull that one over. Okay, and so now you can see the bid offer spreads on that. So right here on the US Tech 100, then 4502.4 to 452.8. I mean, a little bit wider today. That's probably one of the wider I've seen, but okay, there we go. Now it's popping back in. Okay, 4 pips. So we got 4 pips wide right here. 4 sounds big, but understand that their tick size is 0.1. What do I mean by that? If you click on this little link up here, you'll actually get this big pop-up, okay? And notice how it shows Nadex tick size 0.1, tick value $1. NASDAQ tick size 0.25, tick value $5. Okay? And then it takes 2 Nadex contracts equal 1 NASDAQ. But what I want you to see is 0.1. So a 0.4 bid offer spread. All right? Because that's really what it is. It's when I say 4, ticks, it's really 0.4 bid offer. Well, NASDAQ is 0.25. Easy. Okay? Always 0.25, maybe 0.5 now and then, but pretty much 0.25. So we're not even talking. It's not like 4 ticks wide. It's 4. It's basically a little less than 2 ticks, a little bit more than 1 NASDAQ future tick wide. So it's a really narrow bid offer spread for an option contract. Options usually have much wider bid offer spreads. So I hope that makes sense right there. We got to get 0.25 NASDAQ and then Nadex 0.1. So seeing 0.4 is right near 1 tick wide. So I like the bid offer spreads on the contracts, specifically on those. Some of the other ones, I mean, a lot of the other ones are great. This is just one example, but these are the 2 contracts that when people are coming in, they're like, hey, I want to trade. What should I trade? I'm like, well, here are 2 contracts you can focus on with really tight bid offer spreads that will really mirror the market a lot. So that sort of gives you a place to focus, and those are instruments, of course, that I like to trade. I like to trade gold. I like to trade futures. I like to trade, all types of futures for NASDAQ. Oil. So we were looking at oil earlier. What are the oil spreads right now? They're a little bit wider, but I mean, oil is, having a major crash day. So, options are going to get up a little bit. Okay? All right, we'll be back right after this.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. And so we're going in. We've done a little bit of reviews and going through a couple things. Hopefully you saw some of the tips and tricks I was showing you on the new Pro Scanner here and how it works. But I was going in like right there next to the contract name. If you click that, it gives you all the contract specs and tells you, what market is, what the hours are, what the ratios are, what the tick size is, the tick value is. There's a tear off button right here to tear it off into a whole new window. Okay. So you can move, that market right by where you want it to be. There's an indicative index chart right there to make it really easy to find that chart. There's also chart icons right here, right next to each one of the specific contracts. So that way you can open those up and look at and review them as well. So these are some of the little things that people sometimes just don't notice. But, of course, we got countdown timers built in. We got proximity and premium, positive and negative, calculated for you. Minimum risk reward. We got ticket icons and got, lightning bolt right there for the new instant submit order function, which is fantastic. It makes life so much easier. We do some, proximity, by the way, is priced in underlying tick size. So don't let that throw you off, but it's priced in underlying tick size. And also lets you know, is the market in the spread? See, or not when you're looking at this. So right there, the market's in the spread. If I go down here on that contract, let's get rid of these others so you can see it specifically. And I just click over here in the middle between premium and proximity to select it. But notice it's deep in the spread on the sell side because the market's below the floor of this contract. But it's out of the spread on the bot side, meaning the market would have to move up to get inside the floor and the ceiling of that spread. And it tells you, out of the spread, deep in the spread, okay? In the spread means the market's, in between, okay? Near the market, NTM near the market means the market's within 10 pips of where the market is. So basically the whole goal is to make it to where it can do all the math for you and just make your life super, super easy, okay? Okay. Let's see. Trying to go through anything else. That's the main stuff right there. I mean, it's your risk, your reward, your bid and offer, your proximity, your premium, risk reward graph. Again, making life just super, super easy whenever you're using, any of this to trade Nadex. And that's the whole goal. I made this to make it easier to be able to trade Nadex. And, people go, well, is this an advanced tool? I'm like, no, this is an out of the gate, easier, faster. Whether you're a brand new trader or whether you're an experienced trader that's been trading for a long time on Nadex, this is a tool that was made for you to help you out and make it easier for you to trade. Let's see, what else do we got on the list? We got that. This is only got a few minutes, but it's the miscellaneous question that has come in off and on. Let's see, we got hedging spreads with binaries. People say, can I hedge my spreads with my binaries? Or they say, can I hedge my binaries with my spreads? Okay. The short answer is yes, there's a way to hedge spreads with binaries. And it's really more, how do I put this? It's using premium to pay for an out of the money contract. Okay. And let's see here. Y'all have a great day, and we'll talk about it more tomorrow, okay? Ran out of time. All right, y'all have an excellent day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.